Strategic media and public relations is bringing together dynamic companies, investors, and consumers like no one before. And we're doing it in a unique way while addressing the big changes underway in our world. Our world is fraught with both peril and opportunity. The world is changing. Long-term conflicts are shaping up over commodities, currencies, and influence. Political lines are shifting. Yet mankind moves on to meet the needs of a growing world. Newer, cleaner energy, medical breakthroughs, ways to better our lives, better ways to move into the future. Join us now for today's topic.
Hello, folks. Thanks for joining us today here at Strategic Media and Public Relations. My name is Eric Radez. I'm the president, and I'm also joined by the company's vice president, Chris Temple. Thanks for joining us today, Chris.
Hey, absolutely. We're going to see if we can help some people do some damage today when it comes to figuring out how to get the word out.
Absolutely. So, what we would like to do here is, target this video towards companies that are looking to get their word out a little bit differently, or even if you have a cause that's worthwhile that we believe in as well, we'd like to really help you out with that. And here at Strategic Media, we are really we're launching a grand reopening for ourselves here in 2025, and we'd love your company to be a part of this with us. We have a lot of things to offer, and we have a really unique vision for what we'd like to achieve. So, moving on, Chris, um, you know, uh, we've been through a lot together over the years. Uh, we've we've been down many paths. We we've seen things done wrong a lot of times and right a few times as well. And I'd like to think that we've gained some great insights just from our personal experiences, and both of us trying to help companies, make the most out of what their story is, and getting the story told properly to people that are interested in listening to what their story is in the first place.
We've started out, I guess, in our respective careers, Eric, coming at things from different angles. You worked with your dad for a lot of years and very well known, once upon a time, Chicago Resource Expo. To this day, I talk to companies every now and then, fellow speakers that used to be at your conference with me many moons ago, who finally remember how great those expos were. And it was because they were personal. It was because they built relationships. It was because they were credible. There weren't hokey come-ons. There weren't scare tactics. You got to, if you don't do this and this and this, Joe Biden's going to get you. Or back in those days, how maybe Bill Clinton's going to get you, or something like that. But it was all about relationship building, and over the years, and I learned this with my newsletter and what I had to do over the years to get it out, whether in free form or to get people to pay for it. Things have changed. Most of all, of course, we know technology has changed. And just like in so many other things, technology has not necessarily changed for the better to make it easier for any of us, whatever we do to tell our stories. Sure, the means to be able to do it are perhaps more technologically advanced. But the risk today is you get lost in all the other din out there, and it becomes hard to know what to do to break through everything. So, we'll talk about a few examples of this as we go along, but I love an old saying that a wise man learns from his own mistakes, but a genius learns from the mistakes of others. I first started down the road of investigating and doing research on little startup companies, story stocks, as I often call them, back at a time when we didn't have the internet. You rolled up your sleeves and subscribed to voluminous research things. Part of what I did, believe it or not, and some of you folks have heard the term pink sheets before. I used to hold them in my two hot little young hands every week. The pink sheets were a sheaf of papers that were bound together. They were updated at the end of the close every Friday. We usually had them on Monday morning. And it was the last known bid and ask prices for every publicly traded company up through Friday of the prior week that was not already listed on an exchange. And it took a little bit of work, to go through and be able to get a fresh quote if you had someone that wanted to buy or sell a stock that you had looked at and that you liked. It wasn't cheap to do it. It wasn't always easy to do it, you know, but a lot of people did it because that was the art of investing back then. The art of investing back then actually involved rolling up your sleeves, looking at kicking the tires, looking at financial statements, getting the story, visiting management, stuff like that. And today, by contrast, we've gone to a point because of technology, because of a lot of things where the culture and practices have changed on Wall Street in the US, on Bay Street Canada, most other places for that matter, as well as thanks to, in a bad and good way, the internet. Now things are very, very different. And a lot of so-called investing is more like you're playing a video game on a computer or something like that. There's not the research, there's not the respect and understanding of good stories. Now that, as we'll talk about as we go along, Eric and folks, has finally started to change again to somewhat to my surprise and happily so. But a lot of change, a lot has changed over 45 years I've been doing this. Your dad that long or longer, you a bit less so. And a lot of things have changed, and it's much more of a challenge for companies that want to get their story out to do it, for causes that want to get their stories out and their causes out to do that. And as you said at the opening, we cover both of those areas and a lot more.
And moving on, we'd really like to tell a little bit about what not to do. You know,
Yeah.
uh, there's a lot of ways really for companies to waste a lot of money today on different strategies that frankly don't work well. So I guess one of those things is selling your company short, as far as, and when I say that, I don't mean as far as the actual short sale goes, but trying to sell your company like it's got some sort of cheap product that it's trying to hawk onto somebody, um, I, I think that gets really overdone sometimes. And, building, a real story that people can understand and one that they can engage in and feel somewhat connected to, I think is a real key to attracting new investors to your company. And I don't think
Well,
that's
the word, yeah, and Eric, the key word is connected, I, I think in there. And let me follow that up just for a second. Um, and this is frankly one of the bad ways in which a lot of bad practices have emerged in what's called investor relations, if you're a company, or just media outreach, no matter who you are, is that the internet has technically and mechanically, in some ways, I think, made this all too easy. We know that everybody does this because we all get our email boxes inundated with crap,
yeah,
which a lot of it is,
absolutely.
and that makes it hard for you to come through. And so what happens is that a lot of the come-ons these days say, hey, we've got the magic formula, the secret sauce, whatever, to get you this, to get you that. And, many times I've shared reports that I get, Eric, from a media outlet that we both work with, and every day I get a report in the morning of every place out there in the ether on the internet that Chris Temple and or the National Investor had some content published yesterday. Some of it I know about, some I don't, because people pick it up and repurpose it. And I regularly see reports from different outfits, and these are outfits that will charge you, if you're a company listening to this, a lot of money claiming that they can get you a huge audience. And I remember one of them one time, I wrote a story about one of the silver oriented companies that I have on my recommended list that got picked up by one outlet, then it got sent on to somebody else. In the report, that I got, it said that the audience, or what they call potential audience, so they put potential in there, was something like 500,000 people. Well, I don't know if they were on Mars or Pluto or the next solar system away. They sure as hell weren't on this planet or in this solar system, because I didn't see anything out of this. The company in question didn't see anything out of this. But people pay a lot of money for that, and it's what a friend of mine, and he's not the only one that has used this term, dubbed spray and pray. So, that is one of the ways in which, and to your point, when you spoke a minute ago, Eric, companies are talked into selling their story and trying to force a decision on investors' part or on brokers' parts, as it may be, to buy into directly or indirectly their story as if it's soap. I mean, a while back after I watched this ad on TV, maybe for the third or fourth time, I bought this stuff called Clean Boss. Okay. And it's an ad on TV that says, hey, even if you've got organic fruit, there's still, or vegetables, there's still this on it and that on it, let alone if it's not organic. And so they've got this stuff that they claim is all earth friendly and organic and whatnot. You spritz it onto your head of broccoli, and instead of the water just running off because it's got wax and residue and pesticides on it, the water will actually go through, and it proves that it takes this off. Well, what the hell? I want to eat right. I want to eat healthy. So I bought some and I like this stuff. It works. And it did what it showed on TV. A while back, a company that you and I are both familiar with that I cover, BioLargo is the name of the company. I bought one of their products. Didn't even know for sure who the company was, at least at that time. But this is an ad that people have probably seen even more so. It's for a pet odor remover called Poof. And one of BioLargo's subsidiaries actually came up with this formula to neutralize pet odors. And of course, the catchy thing about this ad is that you've got a guy on TV like he's at some farmer's market or home show or something like that, got the audience around him. He's got the little headset and the microphone on. He's spraying this stuff in his mouth to show us. And people remembered that. It's catchy.
Sure.
Okay. Folks, if you're a CEO, if you do investor relations for a CEO or a company or companies, if you're another officer that does that, if you're trying to figure out media outreach, do not try and sell your company like you're selling Poof or like you're selling Clean Boss or something else that somebody can easily make a decision on. Well, hell, 29.95 plus if I order now, I get a free uh, added jar of this stuff along with it. Okay, that's a no-brainer. But when you're asking somebody to spend thousands of dollars or invest thousands of dollars of your savings in your company's equity, you cannot sell it like that. And one of the big problems still to this day, because everybody's trying to outcompete everybody else and make a big flashy splash, that's what happens. And I have seen companies that I know, and it breaks my heart to see this afterwards, aggravates me some, I gotta say, that I see them spend tens or hundreds of thousands of dollars on stuff like this, Eric, and you've seen it too, to no avail. And in fact, what sometimes will happen, if there's any traction whatsoever with the lists and the come-ons and whatnot that they buy, that you'll get a big spike up in a share price and then boom, when the campaign's over, it comes right back down. And that
That
makes a bad situation worse because later, if by any means somebody runs across information on your company, whether through your efforts, our efforts, the man on the moon's efforts, doesn't matter. And this, Joe investor decides, okay, well, this sounds halfway decent. I'm going to investigate this a little bit. Do you know how off-putting that kind of a stock chart is? I mean, it's one thing if you're looking at small cap stocks generally, whether biotech, whether natural resources or whatever, that almost all of them have got variations of a slow, dull ache of a stock chart trending slowly and inexorably downward for the last few years. We all know that because that's been the nature of the markets. I think that's going to change. A lot of stuff I'm putting out right now with the National Investor explains why. But within that, when you see a big pop and a big increase in volume and then it goes right in the other direction, that is extraordinarily off-putting. That's like kryptonite to an investor that's got half of a brain looking at a company. Says, "Oh, keep me out of here."
Yeah.
So you want to be really careful of stuff like that. But again, it's, that's one of the bad things that's going on out there. You need to build relationships. You cannot sell companies, your own especially, as if you're selling soap or the latest consumer doodad.
Yeah, those stock charts like that really tell the story that you don't want to be told.
Oh,
So best if avoided if possible, and that's what we're here to help you with.
yeah.
We want you to associate yourself with credible content that is easily understood, and to piggyback real issues that are going on in the economy and the world, or whatever macro economy you want to put yourself into, real issues that people can understand and relate to, and that's really what we're about here at SMPR.
Well, and when you talk about credible content, and again, I think part of this comes about because of, this pressure to try and say or do something or have some kind of a message that's outlandish at times or that's really catchy. And look, I can be catchy, I can be caustic, I can be controversial if I've got facts underneath me that I can defend, okay? But there's a lot of come-ons out there that are just totally off-putting. And I want to give you an example. You and I, to some extent, Eric, are gold bugs. I mean, philosophically, I've always been a gold bug. As a practical matter, I haven't always been a gold bug. There's times that I don't like the space. There's times that I've advised against it. There's times I've even advocated shorting gold stocks, especially when the market was against them. None of that's been in the recent past because, like I started getting table pounding bullish last fall, the stars were aligning for gold to have a big move, even though to date, most other commodities have not participated in that. And I just did a big uh, seminar on the new fangs theme that I've talked about before. If any of you listening to this have not seen that yet, let me know. I'll send it along to you. It's all different kinds of investing themes. And I explain in there what has to happen for these other commodities to start getting traction. And, that's part of our educational process to get audiences of different kinds as time goes on to understand the factors that will undergird your story. So they're not looking at XYZ company in a vacuum. So again, as far as the things not to do, you want to avoid really hokey stuff. I mean, anybody comes to you and says, well, we want to do a campaign for you to sell your gold or silver or related story, and we're going to tell people if they don't buy it, they're going to get Biden bucks in return, or that there's going to be a new IMF currency. They've got to protect themselves by doing this. And so, I mean, there's such nonsense out there. And it's especially in the area of precious metals, primarily some natural resource stories specifically. These days, I'm seeing all kinds of misrepresentations of a number of President Trump's executive orders where they take sometimes, if it's not completely fabricated, they'll take a grain of truth and then spin it into some crazy story about this is why AI stocks are still going to go to the moon, or this is why crypto stocks are still going to go to the moon, or this is why you need to be in resources because of Donald Trump's executive orders on permitting or whatever. There's a lot of good things going on. There's a lot of things going on that are being exaggerated too right now. And I've been talking about that a lot recently, as you know. Eric. So again, our job is to help people with the old adage. I mentioned the one earlier, that a wise man learns from his own mistakes, but a genius learns from somebody else's. Because a lot of what we're all about is looking, at our collective, approaching a century's worth of experience and seeing what doesn't work. And I'll say, so we don't do that. What does work? We do the opposite. We modify things or whatever. And part of that is another old business adage, find a need and fill it, because almost all of the efforts, astonishingly, that are out there still are either off point, they either go through obscene amounts of money with no results because it's kind of the spray and pray and throwing spaghetti against the wall to see what'll stick, etc. There still needs to be, folks, relationship building, education. If it happens, wonderful, but you cannot start out expecting investors to want to be adding your company to their portfolio after the first or second or even the fifth or eighth time that they hear about it. But if over time you forge what I often call an umbilical cord between you and people that we can bring onto your mailing list, you build up a level of comfort. They get to know your story better. And inevitably, those people will come around. At least some of them will. So there's different ways that we approach that.
And that kind of brings us into, what we are about here at SMPR. We, what we do is not proprietary. We use similar technology and methods than a lot of the other firms out there do. But what does make us different is the effort we put behind what we do for you. And that goes into, us rolling up our sleeves, getting on the phone, having personal contact with people that are interested in hearing your story. Taking what we do is way beyond any spray and pray concepts that people have out there. So, in a way, we kind of augment some old school techniques, which is picking up the phone and talking to people like, real people did once upon a time. But
Yeah.
that's so effective though. It sounds simple and it kind of is, but in the end it takes effort and a lot of work.
Well, Eric, on that point, a mining CEO that you and I both know for years, he used to be at your show. I recommend their company, Avino Silver and Gold Mines, actually. Great company. And you look at their stock chart recently. They've had a hell of a nice run.
Yep.
Everything's coming together.
Yes, they have.
But I was talking to David Wolfin a while back when we were comparing notes on IR and things like that, what works and what doesn't. And look, David, most of the time, whenever I do a special issue, the National Investor, he loves to spend a few bucks and support it and help get Avino's name out there more. And and because of our again relationship, this is a lot of this business between us and companies and retail investors and is relationship building over a period of time. And because he had told me and his IR gal had told me that they for a while now have stopped spending money on a lot of these usual suspect firms out there. And he made the comment to me that I have gotten more out of making my son, and I'm paraphrasing this, but I'm getting the story about right. He says, I've gotten more out of making my son sit down for, chunks of time, 2 or 3 days a week, and just get on the telephone, call brokers, call analysts, call newsletter editors, call other influencers, and just have that personal one-on-one conversation and tell our story and be willing to retell our story. And he said, having his son in the corporate headquarters on the phone has done more for them than blowing all this money on spray and pray and everything like that ever did. And you can understand that. So again, it's not rocket science. It's old-fashioned values. It's rolling up your sleeves. And again, it's all about relationship building. So, let me give you one other example. And I was talking to another one of our companies that actually we're going to start doing some work on imminently for strategic media, a company called Plurilock Security. One of a few of the newer recommendations of mine in the National Investor that deals with cybersecurity, which is a rapidly re-intensifying industry for a whole lot of different reasons. Okay. And I said to them, because in the past they've done some of this spray and pray work and stuff, and it doesn't always have a lot of enduring traction. And I said, let me give you an example of the kind of thing that we'll do. Okay. Let's say that you just inked a deal with a government agency that's got, headquarters here or there. Okay, not necessarily just in Washington, or with a Fortune 500 company because you're going to handle some of their business. If there's a geographic location that affects, like it's in a Seattle business, just for sake of discussion, okay, we want to, on your behalf, overtly, not just with a one press release and we're done, not just with an email blast and we're done, but we're going to start with press releases or email blasts or both, and then follow up with investment advisors, with brokers, with influencers, with people in your industry, with people in the media, bloggers, local talk radio, local business talk radio that cover your industry. all right, and get you on the map. Because another thing down the road, folks, and again, no matter who you are, but this especially applies to public companies, of course. When from time to time investors hear your story, however it is, a lot of the things we all do these days, well, Google it. Throw XYZ company into your Google search or your Bing search or whatever, and see what comes up. And if all that comes up, or almost all that comes up, is stuff from just your own website or from the usual suspects as far as stock touts are concerned, that are obviously sales and even hype oriented. And if that's all people see, okay, well, all right, that sounds, maybe it's all right. But what if they put your name in a search and half or more of what comes up on the first page is not stuff that you put out or a paid promoter put out, but it's an interview your CEO gave to a local prominent newspaper or to a local news anchor or to some influencer that handles your industry, or they sit down and interview you and kick the tires and so forth. That's what we want to help bring, among many other things, to the table on your behalf. And again, it's all about broadening your outreach, broader credibility, and not spray and pray, but speak and repeat and build that rapport, build those relationships, because that, at the end of the day, is what is going to, over time, get brokers, get individual investors, get investment advisors and others on board with you.
Sure. That's and we create engaging content. It's understandable. We try not to get in the weeds with technical information. We create content that's understandable, relatable, and is something that the average investor can ingest and appreciate, and hopefully make a move on. So and through that we generate relationships as we always have, and we've really spread our wings and really been able to contact different people in the media, different people in your industry that matter, influencers, and especially the retail investing audience. It's been an amazing thing to see what we've been able to do, Chris, and I'm excited for 2025.
Well, it's fun. And I'll tell you what else is interesting now. And no matter what type of company that you might be CEO of, and again, I'm going to stick right now for purposes of our discussion with public companies, even though a lot of these same principles will affect you if you're a private company, whether or not you're thinking of going public, if you're an organization, an association, or whatnot, trying to get your word out. I said earlier on in our conversation, Eric, that a lot has changed technically and industry practices and so forth. I remember the very first time that institutionally the financial world started its attack, if you will, on independent advice, independent analysis, and more specifically on small cap stocks. Do you remember when that was? Well, you weren't doing this yet yourself, I don't think. You were still a teenager.
Yeah,
But
yeah.
after the stock market crash in 1987, among the first things that happened was that there were new rules instituted on the part of brokerage firms, broker dealers, where you could only handle unsolicited orders for stocks, for example, under $3 a share.
Hmm.
And they started in a big way this institutional and even cultural move in the financial community away from the typical stockbroker being able to do research on and recommend individual companies. They all became robots over time. Now, the crazy thing about it was, and this was a preconceived game plan, I believe, on a part of Wall Street for a lot of reasons and that's a story for another day. But two things caused the stock market crash in 1987. Number one was when the Japanese in those days were refusing to buy further treasury bonds unless the interest rates went up considerably higher. So they started the year around 7% for the long-term treasury bonds. By the summer, they were up to 10%. The stock market managed to rally during that time, astonishingly rallied a lot from the beginning of 87 through about August. But then finally, it was like Wile E. Coyote off the cliff, and his Acme rocket booster just ran out of gas, and all he's got underneath him is air, right? And over the next 2 months, the stock market gave back the 1,000 points it had added from the beginning of the year onward, and it did it in about a week and a half, with 500 of it coming, 508 of it infamously coming in that one day on Black Monday on October 19th. So that was the first cause. The second cause was what made the dominoes falling uncontrollable for a while, what in those days was called portfolio insurance. And I won't get into all the things, people who remember that period of time remember the term portfolio insurance, and it just allowed selling to feed on itself. Okay. Point being, folks, that small cap stocks had zero to do with the stock market crash in 1987. But as the years went on, more and more, the average stockbroker, even the average investment advisor, came to be robots, and they have these strategies that come from on high. You've got an approved list of products your compliance department says you can sell, garden variety mutual funds or exchange traded funds or plain vanilla kind of things. And that and a lot of other things made the whole culture go away of, the art of investing. Okay. You know, Microsoft, Apple, IBM, all of these companies that became legends over time, they didn't start because some compliance department said, okay, this is a large cap enough stock for you to buy. They started in people's garages and basements or in their brain. Okay, they didn't have two nickels to rub it together when they started, but you could buy stock in them. And once upon a time, investment advisors and even retail stockbrokers, if they knew of the story and liked it, they could sell it to their clients. Okay, that went away, but it's coming back. And one of the things that we especially are adept at helping with, if you've got a small cap story, a micro cap story, how do you navigate what is finally, after so many years in the wilderness, the beginnings, the inklings of a change in culture to where all of a sudden these things are allowed again? I mentioned to you, Eric, you hadn't even heard this yet, that just a couple of weeks ago, I belong to a registered investment advisor outlet network. Okay. And one of the things registered invest, I'm not one, by the way, but I qualify to get this information nonetheless because of other reasons. But if you're a licensed registered investment advisor, let alone if you're a FINRA or NASD broker dealer or broker dealer rep, you've been wearing a straitjacket for a lot of years. Okay. But now things are just starting to change a little bit. A lot of it's because of what we see in the news every day, the acknowledgement that the U.S. has got to get its house in order and start looking at our own sources of energy and critical materials again. So resources are just starting to creep back into the vernacular a little bit. That is allowing them to creep back into the consciousness of the investment industry. It's only the beginning. I'm not going to try and overstate this, but I have been very encouraged and borderline surprised at times to see in all of the emails that I get from one particular trade group that deals with investment advisors that you can now in the US get continuing education credit to keep your licenses and whatnot in good order by going to a seminar, for example, from Sprott to learn about their new copper and silver and base metals ETFs or about their uranium ETFs. I was on one just a couple of weeks ago from an outfit that runs a couple of small funds on small and micro cap stocks. So it's not as though the regulators don't know that these things are out there. And now they're allowing advisors to get continuing education credit for understanding these sectors again. I've run into, in the recent past, retail garden variety stockbrokers and NASD registered reps who, all to my astonishment, are now getting into individual stocks again. One from a firm that the last one I ever thought I'd see get into this again. So again, this is not a cure-all, but when you understand the landscape, and there's similar things going on in Canada. Canada, Eric, as you well know as well, is much more of a resource-centric economy than the U.S. is. And yet, a lot of the same cultural and financial things in the last few decades, cumulatively, have pretty much shoved all of the old analysts and analytical abilities on behalf of most firms away from natural resources, small cap, micro cap, stuff like that, even up there. It's all about the passive investing game and the ETF menus and things like that. But that's going to start to change. For a lot of macro reasons, they're going to force this. It's going to take a while. But one of the things that I've especially been able to do individually and now through SMPR with some of the companies that I research and try and help out is to show you and explain to you how and why you get a US listing, for example, on the QB or the QX, which these days you pretty much have to have thanks to an SEC change a few years ago. It's pretty much non-existent anymore to be able to do trades buying or selling through what we used to call the pink sheets or came to be known as the gray market electronically. But even a QB and a QX are appropriate only at a certain point. Okay. First off, let alone I've had companies say to me recently, one in particular I had a conversation with, I actually talked them out of it, of listing on the New York Stock Exchange ARCA or Amex index, as it's called, the old American Stock Exchange, which once upon a time used to be a standalone exchange. Proportionally, it had more resource related companies, all the old mining companies for a long time, except a few of the biggest ones were on the Amex. Then that got absorbed into the New York Stock Exchange kind of as a part of it. Okay. But there's a time and a place for that. And for most of the small resource juniors I see, it's kind of overkill and premature to get on that unless you meet certain criteria and you are ready to or are already marketing to the people to whom that kind of a listing is going to matter. So where you're listed is relatively less important than it is to know how to properly get your message out to a retail audience, which does not need, frankly, those listings to be able to buy your stock if you do it right. So a lot of stuff is going on, stuff is changing, and that's areas too, Eric, where people are kind of living in, 30 or 40 years ago and not understanding a lot of the evolution of things, the changing of things today that we can help you with, folks.
Yeah, it's interesting to see after some time now how things have changed and it's kind of come full circle almost and seeing some light showing through the cracks, if you will. And it you know yeah, I mean, we used to travel around all the time and walk mining properties and look at drill core and like all the numbers, and we dug deep to figure out if the company was right for our clients.
Yeah.
And and that whole concept for brokers these days is just really gone to the wayside, and it's just come so clinical, and whatever
It has,
the legal
but
department says, you do this and you do this.
right. Right.
So
But again, there are glimmers of that starting to go back in the other direction. And, a lot of the content, folks, that we put out, some of you who have followed me for any length of time with a national investor already know that I put out a lot of this kind of stuff. But a lot of macro changes, a lot of societal changes, the geopolitical changes, stuff that we've never seen or haven't seen in a long time are all coalescing to upend an awful lot of things. We're seeing the global order upended. We're heading to a multipolar world. It's not going to be clean. It's going to be messy. We're going to see a lot of upheavals in society. Just in the financial area, I've talked recently with a few old colleagues at a conference in New York about the fact that what we've termed financial repression that has been going on all over the world since the 2008 financial crisis. The jig is up for that. And so now we're going to see chronic upward pressure on both inflation and interest rates, even in a good scenario. So how do you navigate that if you're a consumer, if you're an investor, if you're a company trying to make yourself relevant? How do you meaningfully navigate all of that and make your story fit with the narratives that are going on today? And that's a big, very, very important thing. So anyway, not to belabor all of this, folks, but we would love to sit down and visit with you. Some of you watching this video already have inklings of what Eric and I and our recently bolstered team are up to as we get more aggressive in some of the stuff we're doing. We believe, obviously, that the timing is right for this better mouse been working on building, and we want to share that with you. And so, without any cost or obligation to you, we just love to sit down with you one of these days, Eric and I, and our main sidekick, Michael, if there's some technical things that come up, would love to sit down with you, your existing team, and just brainstorm, just kind of do an audit of what you're doing right now. What's good, what's working, what's not working, where can we fit in? And if we don't fit in anywhere, fine. We'd still love to share our content with you. But I think there are places more often than not where we're going to be able to give you some major value added and not spending the obscene amounts of money that sometimes I see for some of the spray and pray stuff out there that makes me cringe when I see some of these things.
Yeah, we'd love to sit down with you folks and have a quick conversation and see what we can do to help. So it's really the sky's the limit, and we'd like to be there to help your company get some more traction in the market, because there's a great opportunity right now with the tides changing, and we'd like to help you take advantage of that.
We hope you got a lot out of today's subject. Make sure you avail yourself of the resources and contacts offered today. Subscribe to this channel for future topics and opportunities. And if you have any questions, drop us a line. Thanks for tuning in.